Hello, in this presentation we will record a transaction into our bookkeeping problem in Excel for an advance payment from customers. Keeping in mind how this same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to first look at QuickBooks quickly and then go back to Excel and put this same information into Excel. First, we'll look at the home page in QuickBooks. This is the customer home page. And what we're saying here is we have an advanced payment from a customer, meaning we got paid before we delivered the service. And that's going to be a little bit opposite than the typical type of transaction, in which case we get paid at the same point in time, or we actually often do the work before we get paid. There's going to be situations in which we might get paid before we do the work. And that could be, in our case, we might be getting a down deposit on a guitar. If we don't have the guitar in the store, we might collect a deposit and then order the guitar. There's going to be other situations where we could receive payments before we actually do the work and therefore can't really recognize the revenue at the point in time that we have received the payment. So we're going to record that in QuickBooks with the receive payment icon, just like we would anytime we receive a payment. However, we usually click this icon after we actually entered the invoice, later on receiving the payment in the mail. In this case, as the flowchart is going here to here, we're doing this opposite. We're doing this first, and we'll enter the invoice after we have completed the work. So when we go to the receive payments, we're going to say that this is the customers, Anderson Guitars. We're going to say that we received 250. We have the date and we have the check number. The thing that's going to be different here is that we don't have any related invoice like we typically do when we receive payment. So this will be the information, what will be the journal entry when this happens. When we have the receive payment, typically we debit cash. That means we're going to increase cash. Not the checking account yet. It's going to go into undeposited funds. And then the other side typically decreases the receivable, matching out the invoice, now saying that we have been paid for an invoice entered in the past. We don't have an invoice in this case, and therefore what we're going to end up having in QuickBooks is something odd, and that's going to be a negative receivable for this particular customer, Anderson Guitar. That is not actually proper because we would expect that we would have a liability related to the service we need to make in the future called unearned revenue. But within QuickBooks, it makes sense to do this because it allows QuickBooks to agree the accounts receivable to the invoice that we're going to make later and put that to the subsidiary ledger. So this is what we're going to do now. We're going to do the same thing in Excel and record it as QuickBooks records it rather than record it in a liability. And we'll track it in the same format and see why it might be useful to set it up that way. When we do adjusting entries, we'll actually have to adjust for this and increase the receivable and record the liability for the unearned revenue. So let's jump over to Excel and see what that would look like. So within Excel, we'll enter this journal entry, and we can ask the first question we typically ask when we enter a journal entry, and that is cash affected? We're going to say yes, but in this case, it's not the checking account. It's going to be the undeposited funds. Remember what's happening is we're getting paid in advance of doing the work. We're getting a deposit from a customer, most likely on a guitar in this case, and we'll apply that out later. So we're getting the deposit before we did the work, which in the case of inventory would mean delivering the guitar. So we are going to increase the undeposited funds. We did receive payment, so we're going to copy undeposited funds. It being an asset, we will do the same thing to it, which is a debit. So we'll scroll down here. We're going to put our new account, and the date is going to be 2/16. So we'll put 2/16 here, and we're going to right click and paste 123, that undeposited funds. The amount then will be, the amount we got is 250. We'll then credit something also for that 250. And here's where the tricky piece comes in. If we were to do a book problem and we said that we received an advance payment, we received payment for work that will be done in the future, we would be crediting the unearned revenue account, a liability account. But we're going to follow a QuickBooks lead and try to show why QuickBooks would do this by recording something a little bit unusual, which is going to be a credit to the accounts receivable account. And that's going to result in reducing the accounts receivable, but it's reducing accounts receivable for a particular customer and amount that we had not already input. Usually we have the invoice and then we reduce it. So what we'll see when we look at the subsidiary ledger is that we'll have this credit there that doesn't have anything tying out to it. We have the payment that doesn't tie out to any invoice. That's unusual. That's not really proper, but it does work in that we can then have this information in our subsidiary ledger. So what we're doing in essence is creating a negative receivable rather than what we should be doing, which is creating a liability. But there's a reason for it, so we'll do that. And then if we have to adjust it at the end of the month when we make the financial statements, we will do so with an adjusting entry at that time. So here is the amount we're going to credit accounts receivable. So I'm going to copy that. I'm going to put that at the bottom. We will right click and paste 1, 2, 3. We're also going to go to the Home tab. We're going to go to the Alignment group and increase the indenting. So here's the transaction. It looks like any kind of payment we would receive on account. However, it's a payment we received before the invoice, bit unusual. Here's going to be the debit to the undeposited funds. We're going to go ahead and record that. Before we do, we will freeze the panes. Scrolling up to the top, going to cell AJ1. We will then go to the View tab. We're going to go to the Windows group, and we will select Freeze Panes and freeze the panes. Then we're going to scroll back down and we're looking for undeposited funds. So here it is there. It's going to be in the same location on the general ledger. So we're going to scroll to the right, looking for that undeposited funds. I think it's going to be in this column here. I'm guessing this column. Scrolling down, it's going to be in AU24, AU24. We're going to select that equals, and then point to this 250 in C30 and enter, and there we have the 250. I'm going to correct this undeposited funds up top. We actually put that, it's a credit, it's doing the right thing, but it's on the debit side. That's coming from this account here. I'm going to correct that now by just moving it over here. To do that, I'm going to delete this. We're going to be in the credit side in AV23. Select equals and point to that 825, and then everything should be back to where it should. Here's the 250 for the undeposited funds. I'm going to scroll back over to the undeposited funds in the trial balance, and we see it here. There's the 250. Scrolling back down, we're going to do the same for the accounts receivable. There's the accounts receivable. Accounts receivable is there's the second account on the trial balance, therefore the second account on the general ledger. Scrolling back over so we can see them side by side, we're going to go to the debit. In this case, we have a credit of the 250. We're going to scroll up. We want to be in AR8. We're going to have to scroll down a little bit in order to post this. So we're going to select equals, scroll down a little bit in order to post this, and point to that 250 in cell D31 and select enter. So there's going to be the item, brings down the accounts receivable. Scrolling back over, we should find that 965 in the receivable on the trial balance. There it is. Now we've adjusted something to the receivable. We do want to track that by who owes us the money. So we can see more detail about this 965 by looking at the general ledger. However, we only see the information by date there, and we want to see it by who owes us money by customer. So we're going to scroll all the way over to the subsidiary ledger. We're going to enter the same data. However, this time it will be by customer. We're scrolling to the right. I'm just clicking the right arrow until we get to the area we want to be in. To the right in the subsidiary ledger. Here is our subsidiary ledger, and we're looking at Anderson Guitars, who currently doesn't owe us any money. What we're going to do is just record this same credit, 250, here. So we are in CS10. I'm just going to say that equals and point to that same 250. Enter. And there we have that. We have the 250 there. It's now a credit. It's a negative receivable for this particular customer, Anderson Guitar. Again, that's unusual. That's weird. That's because Anderson Guitar gave us an advance payment. So we actually owe Anderson Guitar something. What do we owe? The guitar or whatever service was promised, and or we owe the money back at the future point. Typically that would be, once again, a liability, but putting it here in the subsidiary ledger allows us then to match up the later on invoice we will have nice and neatly without having to match that up with another account that doesn't have the same subsidiary ledger. So from a practical purpose, does make sense, although from a generally accepted accounting standards purpose, not entirely correct, because we really have a negative asset instead of what we should have, which is a liability. We will correct that if need be when we create the financial statements and make adjusting entries at the end of the month. Scrolling down, we then add up all of our accounts. If we sum all these up, adding all these up, we then have a balance of $965. That then should be the balance also on the trial balance. Let's scroll all the way back. I'm just holding down the left arrow just to check that out. Make sure that that is indeed the case. There's that 965 there, so it looks good. We're then going to unfreeze the panes. I'm going to go to the View tab up top. We're going to Windows Group and Freeze Panes, and then unfreeze the panes. Then we'll go ahead and see what this has done to the financial statements. So I'm going to select the accounts receivable. We did something to that, and I'm just going to point to that on the financials. We also did something to the undeposited funds right there, so I'll select that and point to that on the financial statements. Then we will scroll to the right until we find the financial statements and see what we have here. We've got the accounts receivable has been adjusted. Undeposited funds has been adjusted. Again, that should probably be part of the cash account up here, but we're going to break it out separate so we can see that being tied out. We have the total assets still equaling liabilities and equity. No effect on the income statement because although we got money, we haven't done the work yet and therefore cannot recognize the revenue at this time. We do still have a loss of $246, therefore that loss part of the owner's equity calculation to get the ending owner's equity of $143,929. That amount part of the balance sheet here on the balance sheet.